So today is Wednesday. We have high impact news today in PM. Still today, once again, just a textbook high quality trading day. Was also to take a really quick trade on my iPad on paper at my internship once again. But yeah, going to break down today's trading day. So once again, now we are in textbook bearish trending conditions, daily chart just expanding lower, which columns are important, just of the rejection block right there. So the upper half and the lower half, which are the most sensitive price points. And yeah, we can see that we are trading kind of between the high time frame gaps right there, but definitely respecting them. And now we are trading, or we trade below it. Now we see, or we will see if we can use this as retracement higher and support lower. But yeah, we will see. So once again, in that case, we have really high probability conditions. Why? Because we are having a strong bearish trend. And what do we see? We see a perfect market maker sell model right here, and that's aligned with our higher time frame trend. So yeah, if we have AM being the continuation, so distribution, we just have such good high quality conditions most of the time, not always. For example, yesterday was definitely a bit more difficult because we also saw a high time frame retracement, a market maker buy model right there, which was kind of the play. But yeah, so London traded higher, Newcomb zone slowly lower, and AM expanded lower back to external sales liquidity right there. So that's a hourly low, and also to daily sales liquidity. Two trades we could have taken today, which were really perfect. Before we drop even lower, that's a 5-minute right here, I want to show you regular trading hours. So today, actually quite interesting. No important gap. So we closed right here and opened up right there. So no opening range gap. But what did we do? As you see it already, perfect delivery. 9:45 to the tick, or I don't know if it's to the tick, but just perfect trades to the low of yesterday's open range gap and already slams lower. So that's really perfect delivery. And why do we do this? It's because that's what I talked about in the end of my last video and in my last breakdown. We completed our market maker buy model right here. We trade lower, especially on regular trading hours. We can see that perfectly because right there we trade back to CE, to the upper call level. We are respecting the lower half. That's what we want to see if we are bearish. We don't want to see that we even trade higher and close in the gap right there. And then we just trade lower, dump lower, trade to external sales liquidity. Pardon, guys. So back to our 1-minute chart, and let's talk about the opening. So what do we want to see? We want to see a short-term run stop. We want to see manipulation and a 10 a.m. macro continuation. Newcomb kill zone. No, that's actually London. Sorry guys, London right there. No, that's just no liquidity. We have to lower it here. So what did we see? 9:30 opens up, trades lower, takes out Newcomb kill zone, says liquidity right here. Already taking out the buy liquidity right here, and that's kind of difficult because yeah, in that case that's manipulation. We still want to stay patient. That's really early. We just wait, and then we see this perfect manipulation to the upside with displacement, and that's what we want to see. Why? Because in that case that's our manipulation. And what's also quite clean to see is that we once again have a bolo right here, so large rejection block. Not really a bolo, but the up close candle really covers most of the rejection block, so that's kind of already balanced. We don't really need to see the trade into the wick right there, so that's why we don't see a large retracement. We trade lower, displacement higher, displacement lower. That's a balanced price range. And what do we see? We also respect the CE level right there of the high time frame PD area of the rejection block right here to CE and trade lower. So we could have already, I don't know, entered right here. We could have already entered right here, expecting that the inversion gap will fail. It's just that we need to keep a wider stop. So definitely volatile right here. Let's say we would enter right here. We still need to keep a really large stop. So 60 handles. Yeah, that's definitely a lot, but it's just necessary, especially because then we can even aim for, I don't know, midnight opening price. Also obviously London lows, but even, I think even lower target. So, and that opening price is really good to look for with the London open with the London lows. Yeah, so that's 185 handles. Would have been a perfect trade. Let's do it like this. And then what did I do? I think I was at the charts around here. Was really patient, did not want to look for longs because I really was aware of the fact that we are not done trading lower. Why? Because we have this large 5-minute wick, we have the hourly lows right here, and we have already daily sales liquidity right there. And as you can see, we are in this market maker sell model, which is unfinished with the wick right here, as you see. So it's definitely obvious that continuation will follow. We just have to wait for the right time. And then we saw actually that we were really bearish. This was already enough right here, trading higher with 10 a.m. And then we just rolled over. And yeah, we rolled over and trade lower. So what do we have right here? We have a bearish rejection block, not rejection block, a bearish, that's the word, bearish breaker right here. Where is it? And yeah, could have already entered right here. Was a bit more patient because wanted to see if we reject off the 10-year opening price, because still we have this large rejection block right here. And yeah, just wanted to see how we trade around 10 a.m. and that's what we did. So we first only wick to it, also the midnight opening price, but then we close aggressive below it, come back to the upside, also right here with a suspension block. I think that's also something really to notice. That's indicating kind of bearishness to the downside. And we, yeah, respected it, as you see right here, but more importantly, trade back to the 10 a.m. opening price, rejected there. Yeah, entered short with a relatively large stop loss, I think, at first, but then really trailed it all the way to the candle right here after we saw this aggressive displacement. And then I exited by market right there. Yeah, I thought we could maybe even slam through the hourly lows, but only trade one contract. Was my fault. On iPad, I'm just doing some reps. It's not really, it's just doing some reps. But yeah, this is your first partial right here, and then you aim for daily sales liquidity, going break even. With that, you are not going stopped, and that's your second partial right there. What could you also do? I don't even check that yet, but you could do your opening range would be like this and expand that. Yeah, we could also aim for the minus 0.25 level. Also minus 0.5 would be interesting, but we did not trade back to this. But I think that's a bit large. You could also use just the manipulation right there. And that's also quite clean for the trade I took right here. As you can see, -1, perfectly also trade to it. But if you expand this, I have one range right here. You can see, oh yeah, that's quite clean to see. So look how we reacted to it. Right here with the wick, the minus 0.25 level, then also right here with the bodies, minus 0.75 level and -2. So definitely respecting it right there. That's really what I like. Not really the opening range, but the, I don't know, range manipulation, I would say. You could also look at the implied dealing range. So in that case, if it's created, and then look for it like this. That's also quite interesting to see because reacted to it right there. Oh, it's so much fun to just label out some current levels. But from high to our expected range, so our expected external liquidity draw, daily sales liquidity, and implied dealing range basically means that our range is not still created. And what we do see is that respected with the bodies, the 0.625 level right there. What we do have as well, we do have, I don't know, yeah, close below CE. That's good to see. We traded also to the 0.25 level right here with the wick. I don't know. Also just clean to see they respected, but yeah, I like to use the range manipulation, opening manipulation. And yeah, that's basically the two trades or the two setups we have today. So maybe let's drop to the 5-minute chart and check how we could have adjusted our stop right there. So what I bit not like is the large rejection block right here, so the inefficiency, because that's not balanced as we have it right there. But in that case, up close candle, down close candle, that's also kind of a 5-minute balanced price range, and yeah, we trade lower. So I think I'm content with just keeping a wider stop at first, looking how we react there, because we don't want to get stopped by a wick, and then we just with speed trail it to the high right there, and I'm completely content with that, because we need to see speed if we trade lower. Yeah, that's really clean. That's the two trades, the two setups. So hope you enjoyed it, hope you liked it. But also something to keep in mind that even though we have high impact news at PM today, we still have a strong bearish trending day. We still have high probability conditions. It's just that we have to adapt to the opening. Could have been also the possibility that we just chop around. I definitely don't want to, what I do want is to avoid the AM session most of the time with NFP. So NFP I was really often trading not good at NFP, but everything else, I think it's, yeah, you just have to adapt to the opening. Yeah, that's it. Hope you enjoyed it. Hope you learned something new, and see you soon.